One thing we forgot the last time is the plan data. Do we have plan data? Obviously, we don't have any, but in order to create a standard reporting, we need a plan column if we want to calculate deviations from the plan. Now, it turns out that the lady in accounting did make a plan, but it's a very rough plan, which has one really great feature, which you don't see too often, unfortunately, that she based the plan on amounts. Because too often people just make plans, oh, let's just put in that revenue and then pray for that profit. And very often that doesn't happen. But she planned based on amounts, the number of jackets sold. Not number of jackets made, but number of jackets sold. And she based the plan revenue on it and certain plan costs. The thing is, rivet costs and yarn costs were all summed up in the other cost, but this is a good start. Now, how do we translate this to monthly values? We could just import this into Power BI and then calculate monthly values, but that would take quite some acrobatics with measures and formulas and transforming tables. So I would prefer to have monthly values. Also, it is much easier to calculate comparing numbers between tables that have the same structure. Now we decided that for past values, we're going to do this with a certain amount of brutality and just divide the yearly values by 12. So we do not have any seasonality. With leather jackets, you probably don't get as much seasonality as you get with ice cream or skiing equipment, of course, depending on where in the world you are. But in most places, you have more seasonality in ice cream and skiing equipment than you have in leather jackets. In retail, you would normally expect one big peak in December, because then Christmas comes and everybody buys presents and blows their Christmas bonus, whether they can afford it or not, and they treat themselves to nice stuff. So in December, you usually have a big peak. In some industries, you have 50% of the yearly revenue in December. With leather jackets, that will be less. And then there are also small peaks for products that lend themselves to being birthday presents, because actually the births are not evenly distributed through the years, which I learned recently. Most births in the United States actually take part in either the month August or September, probably because in winter, in December, January, beginning, end of November, people get all snuggly and cozy, and then you know what happens. So yeah, I guess that will be the reason. But we will not have any seasonality here in past values. For the future, this would be something to seriously think about, depending on the actual data that we find out. So maybe we will have peaks in December and September, August, and maybe we will not. We will see that, gather experience, and then use that for future plans. But for this time, we said let's not have seasonality. We just looked up the year with a VLOOKUP function, divided it by 12, rounded it to 2 digits after the comma, and there we have it. Then yarn cost and rivet costs were added to other costs. So we get a denser table. Then we decided to work with start of month, because very often the year-month values are changed by Power BI into start of month data, and we can use that because we are reporting on a monthly basis anyway. We're not going, because we don't have the costs for every day. Also, the question would be, in this context, how much sense that would make. Now we have imported the plan table into Power BI, put it in pretty much the same structure as the is table, except for that we also have the revenue in this one, but only on a month-to-month basis, plan month-to-month basis, but we will be reporting on a month-to-month basis, so that is absolutely fine. We add it up. We put a column in that adds up the direct costs for the month, the whole direct costs, and then put in the formula plan direct costs each. This time based on jackets sold, not jackets made, but from the result it will be pretty close, because most of the ones that get made get sold, and also the values here have been developed based on number of jackets sold, while the is data have been calculated based on number of jackets made. So mathematically it comes down to pretty much the same, only that the direct costs obviously for the first year were a bit underestimated, but that was more a question of the estimate, not of the formula. So now we can start the party and start reporting direct costs is and plan.